What's going on, YouTube? This is Mr. Ray back at you guys again. It's been a while, but I promise to stay consistent going forward. So without any ado, I've been letting people know that I was gonna do this video or do this live stream. I'm gonna get right to the charts. My plan is to make this a weekly thing where I will go over, specific stocks that I like. Now, these stocks that I'm going to show today, I've researched and I've done a little technical analysis on them, and they're just, this isn't investment advice. I don't have a license or anything like that, but I have. I think I've done pretty. That I've worked on my craft pretty well, as far as like looking at charts and kind of getting what I think. What I think is gonna happen. No one really knows. No one out there. If they do know, then they probably doing some type of insider trading. That's about the only way you're gonna know what a stock is gonna do. Like, you got some inside information on what's gonna happen. Other than that, there are a lot of people out here who, you look at charts, you look for patterns in the charts, and these patterns repeat themselves, and sometimes they will do the same things that they've done before in the past. And without any ado, we're gonna get straight to the charts. I'm going to pull up I'm gonna pull up a platform called TradingView. Right now, you can get TradingView for free. You just Google tradingview.com and you can open up an account. Basically, TradingView is a kind of like a social media website for traders. And all we really do is, we mark up charts. We look for patterns in the chart, and then we'll communicate with one another about what we think is going to happen. And so that's basically what I have here. So I got my stocks here. I'm going to do another video, so subscribe to the channel. I'm going to be doing a lot of videos. This video right here, like I said, is just going to be on charts and a few stocks and why I think they're going where they're going. How you trade them is up to you. I offer up maybe what I'm going to do or what I'm doing. The stocks I'm going to show today, some of them I have trades existing in, and then some of them I'm going to put on tomorrow. Like, I just seen one in one of the marijuana stocks, CGC, that I will trade this tomorrow when the market opens. I may do it live. I'm not sure yet, but I will trade this stock tomorrow. So I'm going to show you why I'm going to trade it tomorrow, and I'm not going to be in this stock, I don't think, long. So let's get to it. Right now, I'm going to I know you guys, let's see. I'm not going to do that. Let's just get straight to the chart. Beyond Meat, ticker symbol BYND. And Beyond Meat, that's your fake meat, or the plant-based meat. Just so for people who may not know, what it is. And one thing about TradingView, if you look over here to the right in this column right here, now I can make it bigger, just coming and dragging on it. Excuse me. So this is just showing some headlines from Reuters. Beyond Meat to sell plant-based patties in Brazil. World's #3 beef consumer. And then you can come down here. Every investor needs this stock in their portfolio. I don't know who that is. That's My Wall Street. So these are just, random articles. And then it'll give you like a trading range that it's been in. You can come down here and look at the income statement, net income, profit margin, revenue. So they giving you market capitalization, basic EPS, earnings per share, dividends, price to earnings ratio, employees. Then you could probably click on this. I'm not gonna click on it. You click on it, see more financials. If you into that type of, you want to see all the, the nuts and bolts of how much money, and you even see right here. So based upon some technicals, they got sale right here. You got a sale, right? So you could just look at it. You could pull up one of these stocks and just come over here and say, well, what are the technicals say? What are they saying? They saying sell. So you could get short if that's what you want to do, right? I'm gonna show you how you can look at stocks and kind of like, I'll show you what these funny colors are on my screen. So if you look at my screen right here, you're gonna see this. I guess this is purple. This purple color you see right here. You got one curve or hump or roundy, whatever you want to call it. Then you got a bigger one, and then you got another one. What this is called in technical analysis is head and shoulders, right? This is a head and shoulders pattern. So generally, what you want to see when you get this head and shoulders, you see the shoulders, head, shoulder. I already had this marked up. You want to see it break this, this is what they call the neckline. So this is the low right here, and this is another low. You can see on this day, which was July 14th, it made a low, then pull back a little bit, stop right here. That would be the neckline. So if you looking at my body, I don't even know if the camera can get my body in there. John, I can show y'all. I probably need to you can't see my body. I need to show y'all my body. You can see my chest or whatever. But you'll see if you can imagine like where your shoulders are, that's what this would be. So when it breaks this low, that's when some traders would trade this as a breakout. Wait till it breaks this low, then get short. And then you got a gap right here. So some traders play, the gap fill. Because what generally happens is you have orders here that the market may come back and fill these orders. And then what I really think will happen, I don't think Beyond Meat will just tank. I really think Beyond Meat may come down to right around here and fill this gap, maybe some down here, and then chop around and shoot back up, right? Maybe it'll do something like this. Let's see if I can get this to, that's the color I want. Let's see, we may do something like this and then go like that, right? We might get a breakout like this and then shoot back up to the top. So, but what I want to do is play this break to the downside. So right now, as you can see, when the market closed, it closed at 128.27. Yeah, that's what this red dotted line is. And I actually have I'm going to show you another tool that I like to use when I want to pinpoint where I think the market is going to go. Man, don't nobody know nothing, but what I think. I will come right over here where it says trend-based fib extension. I don't have enough time to go into a fib-based extension. So, but I will, if someone comments in the comment section and wants that, then, I'll do that. So I like to come from the high to the low to the swing high right here. Boom. Right there would be see, you already got one target right here, and you can see where it touched and pulled back. And you got a little consolidation right here. Consolidation is where the market chops around in a certain area. They call that consolidation in technical analysis. You want to see, but I would like to see, like it did that. Now I want to see it break again. The next level will be right here, right around, it says 108.86. I ain't splitting hairs. I would say 110. So at the 110 mark, and that would be what this low is right here. What's the low of this candle? If we look up here at the top, this up here, you'll see open, high, low, close of the candle. So if I put on the candle, it says low 110. I have a trade on a bearish butterfly spread that I put on, and I actually have my spread or my short strikes at, I believe, 110. I had to look at the actual, I don't have my option trading platform up right now at this time because the market's closed, and also it'll pull and drag on my PC, and I don't want my PC to just buffer for no reason. So that's why I'm gonna do more videos through the week with the trading platform up, and then that's when I'll go to the option chain and show you that. So this would be a place. Now there are many ways you can get short Beyond Meat. If you want, you could buy a put, which is an option. You buy a put option to get short, or you can short the shares. If you open up an account with a brokerage firm, you can short shares. You get a margin account. you can get a margin account for $2,000. Now you wouldn't be able to short these shares because Beyond Meat is $128 stock with just a $2,000 account. You won't be. I don't think you'll be able to short the shares. You won't have enough. You won't have enough margin, but you can short it cheaply with option spreads. Subscribe to the channel. I'm going to be going into all of that where you can trade and do these types of things. You don't just have to buy stocks and hold them till they go up. People think that it's complicated to do it. It's not complicated at all. So just looking at this is what I'm looking to take profit to somewhere around here. I could be wrong, but if I'm not mistaken, I think I paid $100 and some bucks for it, but I can't remember off the top of my head. I had to look at it. So stay tuned for another video this week, and then I'll go over exactly what I paid for it. But basically, I'm looking for it to come down here and pin around here. It could go past this and touch this level, but I'm gonna take it to right here. So that's my first trade, Beyond Meat. If you want to follow me on TradingView, like I said, you can open up a free account on TradingView. Look me up. My handle on here is SupremeRe. SupremeRe. My last name is just RE. I'll put that when I get done with this video. I will put that in the description. So then that way you guys can, if you want to set up an account, like I said, you can set up one for free and get free trading ideas. I would do it. Next stock, Twitter. You know, Twitter, I actually published this particular idea on TradingView. I hadn't published the Beyond Meat one yet. Twitter, as you can see right here, I got some notes written up. I got pennant forming on RSI. I'm expecting Twitter to break this range and trade to the $38 level before we see a little resistance. Resistance is just what it means. Like when the stock hits a certain level and starts to slow down, like it's facing resistance. What I'm saying is, once it gets to this level right here, where this gap is, you're going to see the stock slow down. I think it'll slow down right around this level. So right here, Twitter closed at $35.81. So that's basically, if you were to jump, I'm not in this trade anymore. I actually sold some of my shares in Twitter. I'm going to get back into Twitter. I will get tomorrow. I'm going to get back into Twitter. I just got to see. It depends on how it opens. If it opens with a gap up, then I won't get in, because then I would like to see the market open up on Monday with it down. See, that sounds almost counterintuitive, but when you want to get long when the market is down, like you basically want to buy low because you get a better price. You want to sell it when it's high, right? So it's already going up, so I don't want to get in. I don't want the market to get up. I'm not going to chase it. If this market opens up Monday morning and it gaps down, or it's down like right here, then I will get in it. Now I need to look at the option chain to see if I want to buy a call option. I could buy a deep in the money call, maybe go to a 80 delta, 85 delta, hold that position, because if I buy 85 delta in the money call, then I won't suffer as much on theta decay over time, depending on how long it takes to get to where I expect it to go to. I can always roll my calls down as the market goes up. So, or I can buy shares. It's not an expensive stock. On margin, 30, what is it? Where is it at? $35 stock. You get margin on your account, $1,700 if you buy 100 shares of this stock. So, or I could buy a call spread or sell a put spread. I do believe it has high IV because we have earnings coming up on, what is this, July 23rd. So Twitter has earnings this week. So that's gonna be that's gonna be a lot of smoke. That's gonna change the way I look at it. But it could pop on those earnings. So we just have to look. But overall, I am bullish on Twitter. So I'm bearish, meaning I'm short on Beyond Meat. I'm bullish on Twitter. When we go to my other stock, Beyond Meat, I actually have a trade on currently. Like I'm talking my book today. So like a lot of guys will come on and talk to you what they think, and then they don't have a position on. I'm going to put out. I will do a video. I do a video maybe Monday night showing you my positions. So subscribe to the channel. You'll see my positions. I actually have a position on it Beyond Meat. And the next one I'm getting ready to show. Basically on Twitter, all I'm showing is this. I never got a chance to show you guys the RSI. Here it go. See, the RSI has a pattern on it. This is what you would call a pennant. If you guys Google pennant, like go to Google, put in pennant candlestick formation. If you Google that, you'll see people have got like diagrams of what these look like. Someone would call this a triangle or a pennant. It could be either or, or a flag pattern. They're similar in how they're structured on the chart. So the RSI, which stands for Relative Strength Index. You Google that and you can look that up, and you'll see all of those. Basically, with the RSI, what I do with the RSI, if it's over 70, you generally don't want to buy nothing that's over 70, and you don't want to sell anything that's under 30, right? Because on the daily chart, or because that is the consensus area that people look for. Now, that doesn't mean that once it could hit 70. I've seen stocks go all the way to like 80 or 90 overbought. They can just keep going. That doesn't mean they can't keep going. I'm just saying generally that ain't something you want to do. This is right in the range, a good trading range. And you can see that the stock is bouncing around and consolidating in a range right here. You see it. You see right here. You probably be seeing on TV where they talking about V-shaped recovery on CNBC. Are we gonna have a V-shape? Are we gonna have a W? Are we gonna have a L? They're talking about how the formation of the candles on a chart, what the S&P 500 or the Dow or the overall market looks like on a chart. So if we look at this RSI, we see a little bit of a V, right, for this particular stock of Twitter. In this range right here, you have a little V. It's up, pull back, and generally when you get that pullback, kind of like a rubber band, like that pullback, or they call it the rubber band effect. When the stock is up, you see these candles. It started right here. 1, 2, 3, 4, 5, 6 candles up, right? 6 up, and then you got 1, 2, 3, 4 back. So we got a little chop. I'm looking for an explosion. You generally, when it's like coils being tightened on the stock. That's what you got right here. You got it pulling back, and then you have these stocks in a range coiled up, like they're gonna boom bust. Now I could be wrong. You could get it go like this and then boom and shoot down. That's the risk and that's the chance you take. Either way though, most traders will tell you when you in a consolidation range, when the stock is consolidating, that's when you can add on risk, add on positions, because you're either gonna win big or lose big, and that's the way I like to trade. To be quite honest, So I generally, it came down here. This right here is a moving average. This is my 26 exponential moving average. It's taking a moving average of 26 days, and it's actually adding more weight to the most recent days. If you want some information on that, Google exponential moving average, and you can look that up. Like basically, we got information at our hands, so it don't make sense for me to just go over into detail simple stuff. Unless someone wants it, then I will. I'll break it. If somebody comments on that, then I will do a video on that. So once again, I want to see this break right here, and I'm looking to take profit right here. Now that's like $2. So on 100 shares, that's $200. A lot of times, like people will buy a stock and hold it, and they trying to get that next Amazon. You can get that next Amazon, but who knows when that next Amazon is gonna come? Man, take your money, take your profits, and get out the game and look for another trade. You ain't gotta be in there unless you want to. There are some days where I will scout and be in for a couple minutes, or 20 minutes, an hour maybe. And then there's some days, to me, it's less stressful to take a longer time frame and trade, and then control my risk. Never risk more than you willing to lose. So then that way you just cool with the loss. You got to trade it like you don't care. One of the guys that I listen to learning how to trade, he said trade like you just don't care. And the only way to do that is to keep your positions and your trades small. All right, so I'm long Twitter. I showed you the upside break, the pullback. This is a Fibonacci extension tool, like I used on the other one. All I did was go from swing. I went from low, swing high, swing low, and look at my projections to see where I would possibly think. Now, it could shoot up and go past this level, right? This is the level right here. But I want to get out right around in here, because you generally get a little consolidation right here. And then that's when you could get a little pullback. And you might not want to sit through that smoke, So the next one. Let's go. We hit Twitter. We hit Beyond Meat, XLP. Now this one right here, I'm a little less confident in this trade, but I'm in it. Like I'm in this trade already. I put this one on, I think Friday or Thursday. I can't remember. You guys will be able to see when I do a later video this week. Basically, XLP, which is the consumer. If you look over here, it says investment trust mutual funds. It says consumer staples index. So this XLP, if I'm not mistaken, is a sector of I'd have to look it up, a sector of the S&P 500, one of the 11 major sectors of the S&P 500. Don't quote me on that. I do have that as a watch list. I look it up and I double check. I don't want to give out the wrong. I'm almost certain that it is. So what you have is you got like XLY, I think, which is the tech sector, if I'm not mistaken. You got XLF, which I know is the financial sector, because I always look at XLF. You look up here, it's on my watch list, XLF. And you got XLE, which is the energy sector. I pretty much, if the XLF with the financial sector, that's your JP Morgan Chase. That's your Wells Fargo, I think Morgan Stanley, Bank of America. So that's an important sector. So I'm always watching that to kind of gauge like what the market is doing. XLP like popped up on, I got like a list of little stuff that I look for, and I seen it here, right? So let me show you what I'm looking at. I looked at the market. This was when the market tanked back in coronavirus scare. The Rona came out. Everybody's freaking out. You all was freaking out. I was freaking out. We was walking around, didn't want to touch nothing. You see the market just tanked, just took off. You got it was at 64, dropped all the way to what, 48. What's that? 64, 48, and that's $16. What is that? Like 25% drop, something like that. Just like a fourth of it. Something. Yeah, close. 25% drop. Boom. In about, what's that? February 21st, March 23rd, about a month, right? So this whole time, I'm gonna show you what you got. Here's my V. You see, from this high, from this swing to right here, it jumped up. Now, if I was to draw that, let me get this little tool out. This is one of the reasons why I like TradingView. So you can do stuff like this. Look, y'all. Look. See that little V? See that little V? Now what you get is, now you got your initial move. It broke out of here, and then you got your pullback, right? Now, wham, right? Like you running a race. You run, you get tired, you take a break, then bam. And now what you got? Let's see if it'll let me. You got your chop, right? Let me see if it's. Nah, I don't want to keep doing it. I don't want to keep doing it. Let me take you off. All right, now let's go over. See your chop? Look. Is it gonna let me do it? Is it gonna let me? I can't. I don't want to do that. Can I keep going? So this is my first time really messing around with this. I got, okay, let's see. This is kind of fun though. This is what people that like me, like I like to mark up charts. We like junkies for it. We sit here and do this all day. So you see that? This is what they call sideways action. So if you watching it on TV and you see the guys on CNBC, so we got our big move up out of the hole, right? We got our big rubber man move out of the hole. And then we got a lot of sideways action. Sideways action. Now, I'm getting ready to put, I want to remove these because then I want to show you something else. Get off of there. Get off of there. Come on. Here we go right here. This is the good stuff. Once you seeing the sideways action, right? But then you get this move right here. Up across the moving average. It breaks up, pulls back and touches, and then breaks that high. This is what they call a flag. And you see it right here. You see it up, pulled back, and made another high, right? That's a flag. That's a bull flag. See this big long green candle pulled back and then broke higher. So basically, I'm gonna mark this up while I'm gonna mark this up right now. Basically, this is what you got. You got this right here. Let's do it. Is it gonna let me draw another one? Let's do another one. I want one more line right here. And then if I was to take another line, you would go right here. This would be your pole. Boom. Right? You guys see that? That'd be like that's like your little flag. Right? Up, pull back. Up, pull back, bam. Right? So, with that move, this move right here, it broke these highs. It broke out of the wedge. This was a place you could have took profit. See? No bad. Touch, it came right up here, touched it, and then consolidated. Now it's breaking it. Basically, what I'm saying is off to the races. XLP up here to make new highs. I'm bullish in the market right now at this time. The Fed is buying. The Fed, I read today that I was on Twitter. I love Twitter, by the way. You guys can follow me on Twitter. I'll post my handle in the comments so you guys can follow me. You can look my name up. I'm gonna start posting my actual trades on Twitter. So then that way you could look at the trade and see whether it was an option, whether I got shares, whatever. I post the losses on there too. When I close it out, we all lose. That's part of the game. So, but I'm bullish on the overall market. Not because, look, fundamentally, the market shouldn't be going up. But, you can't keep shorting this market. The Federal Reserve is buying corporate bonds. They're buying junk bonds. They're buying debt. I'll talk about some of that stuff on another video so that you guys can, understand. But they're buying debt. And now they're saying if you look at Forbes, they're saying now that they're committed to buying stocks if they have to. You can't fight the Fed. The Federal Reserve is going to print money and buy stocks. Well, you got to get bullish. Who in the hell going to short this market? I'm not. Yeah, there are some big traders out there that have enough capital to stay short. They can stay solvent long enough to handle, they can keep, like, basically in options, you can sell options and roll and roll and roll and roll and roll until you're right. That's one of the things where you got enough capital, you can hold a losing position for a long time. Yeah, I ain't got there yet. I'll be there one day, but I ain't there yet. So I'm not gonna stay short. You see it's breaking out of this consolidation area. What's the next area? To the new highs. New highs is I'm gonna tell you guys what I did. New highs is what, $64, somewhere around 64. What is that? 64 81. So let's call it $65. I bought out of the money calls. Now, out of the money calls are low probability trades. I bought 2 out of the money calls at the $64 strike. right around, I think at the time when I purchased it was right around like a 30, I think it was like a 35 Delta or something like that. And I got 60 something days. I went out to not August, but September, and then bought the 64 strike. I bought 2 calls. So basically I'm trying to pin it. I'm thinking it's gonna get up to 60. Yeah, I think it'll make a new high, but I'll get out once it get to 64. I got an alert set in my trading platform to alert me, and then I can look and see if I want to take profit or not. I'm long XLP. So that's 3 stocks that I've given you guys so far with my take on it and why. I think I'm gonna. I didn't publish this one on TradingView, but I think I'm gonna take these off, and I may publish this and type right up why I think. I got one more stock, CGC. Now, I know everybody want to know about the marijuana stocks. You know, you all want marijuana to be legal in every state. I think it's legal in some states, and I don't know. Yeah, you know, it's. I don't smoke, but you know, if that's your thing, you know you like you got you some loud or whatever, that's on you. But they can make it legal. It doesn't really bother me, but it will make the stock jump. If I can make some money off of it, whatever. So let's check out CGC, Canopy Growth Corporation, and you could come over here and you can look at, you know, what they think. You can look at the profit margins, which don't look good, but look over here at technicals. Look what they got over here at the technicals. Joker, they got buy. You know, I just, to be honest with you, doing this video right here was the first time I paid attention to that. I never really paid attention to that. I really take my trades based off of my own technical analysis, but it doesn't hurt that the technical analysis of this fits what I think as well. So let's get right to it. This one right here is going to be, right here is what I got. This is called a harmonic pattern. What you see right here in the green where you see it says A, B, C, and then D. Basically, this is a B. So that means that from this low to this high, which is AB, will equal C to D. So basically from here, let me see what the low was. The low was 1557. The high is 1842. And then, so there was that 1557 to 1842, roughly, I don't know, $3. Let's call it $3. I think it's about $2.85 or something like that, or $2.80. So basically, from this low to this high would be the market. We expect the market to move another $2.85, $3, whatever, right? So, and then I took my fib extension and put it on from here to here to here. I'm not in this trade yet because while I was getting ready to do this particular live stream, that's when I saw this. I was like, oh, I'll throw this in. Because generally what I want to do is like 3 stocks. I give you my 3 picks, and I do it every Sunday. You know, I can keep myself consistent. So, but I seen this. I was like, well, I got to throw this in the video. Because I promise you guys, I'm going to trade this Monday. Now, this is a $17.95 stock. I might just buy this stock, these shares outright. The calls, depending on how much the call, or sell a put. That's another thing you can do to get long, right? When you don't mind. So I could sell a put. I could come and then sell a put, maybe a at the money put or in the money put. Excuse me. Collect whatever the premium is, and I'm going to go over that. Collect whatever the premium is, and then if the market goes up, then I keep that premium, right? I'll keep that premium. I need to look and see when the earnings are. They got it right here. Earnings are August 7th. So that'll give me, that's less than 30 days. So that means I would have to sit through earnings. So that's another thing I need to be cognizant of. But if I sell the put and then the market comes down against me, I could get put the shares, but that's fine. I'll get put the shares at a cheaper price because I'll get put the shares at, instead of buying it right here at $17.95, if I sell a put, let's just say I sell a put right here at a $17 put, right? At the $17 strike. I don't know how much premium I collect, But maybe let's say I collect a buck. So that puts my break even at $16. So that means that if I get put the shares, I get put the shares when the stock comes past 17, I'll get put the shares. So basically, I want, instead of buying it at $17.95, I'll own it some down here at 16, because you got to take out, because you collected premium up front. So you wouldn't get put shares until they came past your break even point. Anyway, so you could get put some shares. Somebody could exercise an option at any time, but it wouldn't be beneficial to them for them to exercise those shares while the market is. You would want, be honest with you, you sell an option, and you sell an option at a $16 strike, and the option is above you $2, and then somebody you get exercised. That's what you want. You want to get exercised like that, because that means that you're gonna own it at a higher cost, higher dollar cost value than it was that you actually, sold the put at. So that's one of those things about that. That's a little trick of the trade, like to getting long, instead of buying outright shares, selling it out at the money put. You're selling it at the money put. The market just run up, and you just keep the money that you collected on the premium. If it come down, that means it got to come down, and then you get exercised. You get the stock at a cheaper price than you would buying the shares outright. That's a trick. That's something that's something that I learned like later on, but I may do that on this particular on this stock. I may come right in and just sell it at the money put. May even go, right there at the money. It's at $17.95, meaning I'll probably go at like $18 or $17 and sell that put. And then if the market, which would really put me like right here, and then whatever my break even, and push it down here. That's a trade. I'm gonna get into CGC tomorrow. I don't know how, but I will get into CGC. So basically, this is a harmonic pattern. AB equals CD. Some people you can play this one or two ways. You can play it when it gets to this level, because generally you get a reaction once it gets here. So some people will short right here. Once it get to this level, you can get short. You can do this, it's more of a you could sell a call spread, sell calls. I wouldn't do that here. It's more of a tactic that you do, in my opinion, in Forex, because you can get really, really small. You can control your leverage a whole lot more in the Forex market. So like if this was like the Euro USD doing this, you could set your sell limit right here, and then maybe scale into the position, maybe do one standard lot. It just depends on what you trade with. You can do a 10-cent lot, whatever, right? And that's like what, 10 cent a tick or something like that. I don't know. But if you did that, and then set your stop right here, right? And so once it gets here, then you set your take profit somewhere right here, and then you get that little reaction once it hits there, boom, and you take profit. So that's more of a tactic that you do in Forex. I'll do some videos maybe on that in the future. But all in all, I hope you guys enjoyed the live stream. I'm thinking of a what I should name it, but I think I did 4 stocks, and so I'm gonna put them in the title, and I'll keep up with them, and then I may review them next Sunday. We'll review them, and depending on what I get, what kind of feedback I get on the video, what people want to see, what they want to know, I'll start doing more sessions and stuff like that. And so time goes by fast when you're having fun. Hey guys, and trading, one thing I do want to get across: embrace risk. We got a lot to give you a release, and you gotta enjoy. This is the only life, as far as I know, that you're gonna have. So try to enjoy your life. You never know when it's gonna be over. Ain't no guarantees on tomorrow. So just try to be positive and have a great day. Have a great evening. Have a great week of investing. I hope you all make some money, and I hope you all got something from this video. And that's it. I'm out.